Hello, this is Quang and I'm the finance broker and author of Keep Calm and Mortgage On, which is on Amazon.com. So today's web series, it's about a very topic that people don't understand, and I've been getting asked a lot by clients. So the topic is rate lock. So what is rate lock? So two things. Rate lock, what is it? And why should I rate lock? So number one, what is rate lock? Rate lock is the ability to buy your rate today. Okay, so what does this mean? What do you mean by buy your rate today? So what happens is rates, as you know, has been quite cheap. For example, you can get investor principal and interest rate for 3.88%. That's with NAB. Been promoting it for the last 4 to 5 months, but rates do potentially hike up. So they've been the lowest in quite a long time. ANZ, Westpac, CBA, other banks have risen up all their investor rates due to APRA. So basically what it is if you were to see me today and we signed your loan document and then we got you a rate of 3.88%, okay? You would assume that by the time it settles, you'll still get 3.88%. That is incorrect. Unless you rate lock, you will get whatever rate it is that has risen. So for example, it's risen by 40 basis points, 4.28%, then you will settle on 4.28%. So a lot of clients who don't use, or who don't get educated, they get mistaken that the fact they misunderstand that if they sign on this, regardless of whether they do rate lock or not, they still should get this when it settles. And they get very surprised when they do settle and get the loan statements, why they're on 4.28%. It's because they were not offered a rate lock option, which means if I was to sit in front of you, I would say, look, rates can potentially go up. What you are signing on your loan contract today does not mean you'll settle on 3.8% unless you rate lock. So are we clear on that? That's the difference between rate locking and not rate locking. And that's the difference between signing on a loan contract and getting the rate when it settles. So obviously, what is the catch of rate lock? Okay, so what is the catch? Rate lock's catch is you're going to pay 0.15% of the loan amount. All right. Now, why do I mention the fee? Because this comes into the second category is, should I rate lock? Okay, this is when you look at the cost of rate lock, cost of locking versus the benefits. What do I mean by benefits? The benefits you save by locking the rate today versus what the rate will be in the future. So to give you an example of this, say you got a loan of, say, on average $600,000, and you decided to fix at 3.88%. Pretty cheap rate, principal and interest, right? Because if you compare it to interest only or interest only variable or fixed, it's usually about 4.8 fixed or variable 5.2%. So you're saving a lot, right? Say you sign the contract on 3.8%. You decide to rate lock it. Okay, so what is the cost? Do you have a calculator? Let's do it together. So 0.15%. Okay, times 600,000. Okay, calculator's stuffing up a bit. 0.15 times 600. Okay, that's $900. Okay, $900. $900 to rate lock, but you got to ask yourself, if rates go up by 0.40 basis points, which is 4.28. What would it cost me? What would it cost me? So basically, let's do the math here. 0.4 times 600,000. Okay, divided by, that's $2,400 more you have to pay per year. So do you see the difference? You're paying 0.4% more if rates go up to 4.28, which is $2,400 a year, versus the fact that you pay a one rate lock fee of $900. So if this is rate lock for 2 years, you're basically saving this times by 2, which is, 4,800. So overall you break even. No, you don't break even. You benefit from rate locking. Obviously, we don't know when we tell you, hey, let's rate lock. What would the rate be? We don't know. We just hear from our own connections that, because usually the bank doesn't tell you when rates are going to go up. It's only through a broker that they hear, from the grapevine and connections, being in the inside. We tell clients 4 days before, hey, rates are going up. Do you want a rate lock? And we show them the costs and the benefits. 9 out of 10, people rate lock. But if you want to play with the market, that's up to you to play with the market. But make sure when you do have a fixed rate, do rate lock and do this calculation. What's the cost? What's the benefit? If the benefit exceeds the cost, go and do it. Obviously, we don't know whether rates will go up that 0.40 basis points. We don't know. Maybe it goes up by 10 basis points, 20 basis points, 30 basis points. But do you want to play the risk? So in this session, to apply example, just 2 days ago, Friday, I got a call from my insider source who told me rates are going up from 3.88 to, I don't know, right? I had 10 applications going through NAB, right? I called everyone up, did the same, analysis. 10 out of 10 people, maybe 8 locked, okay? The 8 of the 10 people who 8 locked was right and happy because rates went up to 4.09%. So basically, the cost was less. The cost was less than the benefit. So the benefit was more of rate locking on the fee because rate went up to 4.9%. Even though the cost of benefit wasn't that of a big difference, but at the end of the day, we don't know whether it went up to 4.09 or 4.19 or 4.29. So most of my clients were really happy with this rate lock, okay? And some who didn't rate lock, they're like, no, it doesn't matter, same thing. But at the end of the day, is it money in your pocket or is it money in the bank's pocket? So in this video today, we describe about rate lock. What is rate lock? Which is buying the rate today, securing for 90 days. And why you should rate lock when you look at the costs and the benefits. Again, I hope this video really helped. Contact me if you have any questions and leave some comments if you want to share some of your experience. And in the meantime, keep calm and mortgage on.